Hi, and welcome to another Coffee with Brendan holiday edition, as you can see from the Christmas tree. And today is December 6th. And for the last couple of weeks, the market has been very, very volatile, moving hundreds of points each day. And I've actually started fielding some of the phone calls from y'all where people are starting to think, has the market gotten a little bit too top heavy and it's time to start taking some money off the table. So this is a conversation where I'm not going to say yes or no that the market's going to go up, the market's going to go down. But what I do want to show you is kind of a history lesson on what happens with the market, and that every single time you hear someone say this time is different, whether it's on the news, whether it's your friend, whether it's your neighbor, I can't tell you how many times I've heard this time is different. And it may be absolutely different, but at the same time, it's kind of the same general theme. In today's Coffee with Brendan, we're going to walk through that a little bit and show you that this theme is not a new one. So I'm going to share my screen, and on the screen today is a whole list of all these different Time magazine cover stories. And what you can see in the front is the cover story. What you see in the back is what the stock market did. So long story short, not surprisingly to probably a bunch of you, that the market has gone up for a long period of time. And even with some of the crazy things that have happened over time, the market has gone up, gone down a little. That was 2000, gone down a little 2008, but then, the grand scheme of things, way up. And there have been some pretty nasty pieces of news that have come along the way, but still, the general trajectory of the market is up. And that's the thing that I think everyone needs to kind of take a moment to pause and just realize that volatility is normal. Market goes up, market goes down. Obviously, when you have these big giant drops like we had in the 2000s, like we had in 2008, that's very nerve-wracking. But again, some of the same themes that we're seeing today are themes that we've already seen in the past. So let's zoom in on a couple of these, and let's focus on 1972. 1972. Here's the story right here. Is the U.S. going broke? How many times have we heard that in just the last 10 years, with the national debt being the way it is? With that said, I'm not going to dismiss the national debt, as some of you have heard from me. That's one of my things that I'm concerned about. But this is something that has been in the news for over 40 years. Is the U.S. going in debt? Fast forward, you can see some of these, but let's fast forward to 1987. 1987, the market dropped 20% in one day in September. It was because of these new things called computers and computer trading and all that kind of stuff. But long story short, the market dropped 20%. Can you imagine? The Dow Jones right now is in the 30,000s. Can you imagine if the Dow Jones dropped 6,000 points in one day? I think that would rattle a few people, but that's what happened. And again, now we have the benefit of hindsight to look back on it and realize, oh, that wasn't that big a deal. And one of the little nuggets of trivia is that in 1987, the market actually finished on a calendar year basis up that year. Even with that 20% drop on that day in Black Monday in September 1987. Let's keep going. We have the 1990s, pretty much George Bush won. It was all about the economy. And frankly, he lost the presidency to Bill Clinton because we're in a giant recession. That was where he had said, he'd made the pledge, no new taxes, and eventually had to go back on that promise to the American people. Of course, we have the early 2000s, where we had Enron, and that was, I just listened to a podcast on that. That was absolutely fascinating. All the different firewalls that we burst through in order for Enron to actually happen. Then we have 2008. of course, everyone remembers 2008. That was a pretty nasty time in the markets. Let's shift this over to the right. And, we keep going down this road. You can see, jobs. Jobs and unemployment have popped up a few times in this timeline, but 2010, we were nervous about jobs. This one here is a particularly interesting one, and I've mentioned this to a number of clients. 2011, the Great American Downgrade. That's pretty much the result of what happened when our credit scores, the United States, got dropped a notch from the top score down a notch. The market dropped 20% in that short period of time. In 3 months, 3 months it took to drop 20%. That was a pretty concerning time, specifically for me, because it was something that was on my mind, still is on my mind. And then, and certainly something that provoked a lot of anxiety and a lot of volatility in the market. Fast forward all the way to 2016. Now, this one's an interesting one. And again, I've probably mentioned this to a few people on this, but this number here is an interesting number. If I can zoom in here, 42,998. That is the amount of debt that every American man, woman, and child actually has. So if all of us in 2016 paid to the creditors of the United States $43,000, me as I have a family of 4. If I cut a check for, let's say, $43,000 times my 4 people, $172,000 is what I as a family would have to pay off our debt in 2016. Well, guess what? That debt is doubled. So that means that my family of 4 now actually has to pay $344,000. And that's pretty much what it would take for us as an American people to pay off the national debt of approximately $28 trillion right now. So long story short, I'm not here to, in the purpose of this, this Coffee with Brendan is not to talk about national debt and all the different things, but just to pretty much point out that the United States and us and all the folks, at the end of the day, this is not a new thing. All these different things that have happened before. They might be a little bit different in how they manifest themselves, but the market's gone through a lot of trying times and we've come out okay. So that's my message today. Volatility is normal. As we've talked about in prior Coffees with Brendan, the public is not very good at timing the market, getting out of the market when things are bad and getting back into the market when things are low and you can buy things at a discount. So for most of my clients, the message is stay invested, don't get overly concerned about the ups and downs of the market. And for the most part, most people will end up okay. So thanks for listening to today's Coffee with Brendan. And I hope you have a great rest of the day.